Hello, everyone. Welcome to the market update for Tuesday, April the 20th. What makes the selling over the last couple days significant, I would say to start off, would be that it's in all four indexes that we're looking at. What's happened in the past is we've had the S&P has been down, but the Nasdaq has been up. We've had those mixed market type situations, which often take place near market tops as money kind of circulates around. We talked about this in a previous update that you get that sector rotation, and so you're not getting a lot of new buyers coming in, but what you're getting is people getting out of one sector, wanting to put that money to use. They're still bullish on the overall market, and they put it into another sector. And because the indexes are kind of geared towards different sectors, Nasdaq more technology, small caps tend to have a lot of financials and energy stocks in those. When you get that type of rotation, what happens is you can get those mixed market conditions where the Nasdaq's up, but the Russell 2000 is down, or vice versa, and Dow is up, but the S&P 500 is down. But now, over the last couple of days, we've had all the indexes moving kind of together. So we'll keep an eye on that. And another thing too I've talked about is that we're in this topping condition. You start to look for a trigger. I really haven't seen a real strong headline trigger yet as to why we've been selling the last couple of days. There's been some things out there as reasons, but it is in a little bit of a vulnerable spot right here, especially with earnings season and a lot of the big companies reporting earnings. So far, the earnings have been fine, but if there is a concern. Remember, when you're in these topping conditions, I said this before, but I'll say it again here. When you're in these topping conditions and people are getting a little nervous about how much further we can go, usually it's the professionals, by the way, thinking this because they've been doing this forever and they've seen these cycles before. They don't want to be the ones, they don't want to get out too early within a trend as it's going, but they also don't want to be the last ones getting out, especially with the size of the positions they're going to have to try to get out of. They're trying to decide whether to buy protective puts. They don't want to spend the money on protective puts if they don't feel like they've needed them, and they haven't needed them over the last few cycles of buying those protective puts. They've kind of wasted that money, so they're really hesitant to want to buy. And so, but what it sets up for is they've got to have a reason. They got to have a reason to sell, and that reason doesn't have to be profound, but in their heads, they have to have a justification for jumping out of the market as it's been moving up so much over the last several months. So now, it doesn't mean that you can't have these just little minor pullbacks, and that's always what you wonder when you have a day like the last couple of days. Is this the start of something bigger, or is it kind of a little bit more of a minor pullback? Now, I have a tendency just the way the market has shaken off some of these previous little pullbacks. I right now I'm kind of leaning a little bit more towards this as just being a little minor pullback. One of the reasons for that is a lot of times when the larger pullbacks happen, you get a one-day shock where it really drops in a huge way, and everyone's really concerned, like, is this something bigger? And I know the Dow down 300 points hasn't been down that much for a while, but it just doesn't feel like that kind of a shock. And so now that could morph into that. Sometimes you get a little bit of a start of a drop, and then you get a sharp drop. But that's something we'll look at over the next few days is if this is going to be a bigger correction, you're going to get a much sharper drop either tomorrow or the next day to kind of kick off some of that. I wouldn't say panic, concern, because the market's not even concerned right now of pulling back. So that's something to keep an eye on. Now, as we go through the direction alerts, one thing that kind of jumped out to me was kind of the sharp decline in momentum. You can see right here, sentiment is up here at the top, and this is when sentiment's up above the other lines. That's always a sign that the trading crowd is very bullish. Again, it can stay above there. The sentiment's been above the others for quite a while now, for several weeks. And so, you can have the trading crowd being bullish for an extended period of time. But it's as you get more and more bullish, as this line has crept higher and higher up here, you start to realize you're starting to get in that extreme, and we see it in the other individual indicators when we take a look at those. Definitely would signal that we're near top there. But what was interesting to me is to see momentum start dropping sharply, drop below breadth right here. Now, remember, kind of the signal of a tired market was when you have sentiment above momentum, and then momentum above breadth. And that's what we had right here, was kind of signaling kind of a tired market. But now that we start to see momentum start to drop right there, what's interesting for me is to see if that's maybe a little bit of a leading indicator of that could be kind of signaling this market pullback. Now, as with all these things that we go over, you don't want to isolate it to just one or two things. You like to look at things combined. And that's what the purpose of these market updates is, to see what the current conditions of the markets are as we start to make our trading decisions. Momentum, as you can see right here, it was in that extreme range. If you've been following these updates, it's now kind of pulled back into the buy range right there. Now, again, it's not signaling that there's any sort of a panic anyway. It's just signaling a little bit of a pullback. But again, what I thought was interesting was kind of a little bit of that divergence. The fact that sentiment was still moving higher. Breadth is starting to flatten out a little bit, and actually was down a little bit recently, but then momentum had started to drop well ahead of those. And it's what we've been talking about over the last few updates is, where it seems like we're kind of building towards some sort of pullback, and this continues to kind of maybe signal that possibility. Breadth is in that extreme range, but it hasn't gotten more extreme from where we've been looking at it the last couple updates. And sentiment is still not in the extreme range, but as I talked about before, it is usually pretty rare to see that sentiment indicator get into that extreme complacency range. Anytime it starts to enter into there, I don't even wait for it to get to the far right side of that. Anytime you start to get in that extreme range, it is definitely a signal that the crowd is getting too far to one side. The trading crowd is getting too far to one side. They're getting too bullish, and that can be a little bit dangerous for the trend. As far as the buy-sell ratios, we're seeing the sells start to tick up a little bit. Buys have started to tick down a little bit. That'll probably continue. Remember, these update overnight or after the market closes, so I would imagine that with today's sell-off, you're going to see those sells exceed the buys. That's going to cross over when that updates. Not showing an extreme range though. But it can be showing a possible reversal, meaning that maybe we start to see those sells increase over the new buys, and start to widen out a little bit. Kind of like back here where it crossed over. And now you start to see the sells out move the new buys, and then when they get wide like this is when there's a possibility that it's stretched, and they could start to come back towards each other again. They've had a lot of whipsaws over the last few weeks. That's what you would expect in a whipsawing market. We've had kind of up and down, kind of choppy conditions a little bit. And by choppy conditions, I mean it's been a lot of it's been the S&P going up, but the Nasdaq or the Russell 2000, we pointed out a number of times. We'll look at the chart here in just a second. Has been really lagging. It hasn't been participating, and in many cases have been going the opposite direction. And so when you get that, sometimes you'll get these little whipsaws back and forth like that. All right, let's take a look at our individual charts here. So you can see here on the SPY, we've had the 2 down days. Let's put volume up here. You know, volume hasn't been extreme at all. You had a pretty high volume day on Friday. But this is why I like to look at the candles, and I like to look at volume as well as it relates to that candle. So basically, we didn't go anywhere. We had a pretty high volume day, and so that usually doesn't show a lot of. It shows a little bit of exhaustion there, that you really weren't able to advance. It was taking a lot of buying just to barely push the market higher right there. That's kind of how I read that type of price action. Okay, it didn't move. It did kind of gap up. It didn't move very much after that. It was just kind of sustaining what it had done at the open, and you had that after a run up like that. And so, not too surprising that we had a little bit of a downward move on Monday. Almost equal amount of volume. So there's a little bit of heavier volume coming in than we had seen. You see back here, it had lighter volume for the last couple of weeks. Now, when you start to see that increase in volatility, again, increases in volatility tend to be viewed as being more bearish. And then today we've had this down day. We'll see how the volume ends up finishing. Sometimes it's hard to read it intraday here. I would imagine it's going to be up pretty close to where it was yesterday, but there again, not signaling anything that is real dramatic. It might end up being something like this little pullback right into here, where we dropped for a few days and then kind of held and moved higher. A lot of times when you're in for a bigger correction, we haven't had one for a little while here. Let me go back about a year. So this is when it happened back in September. You can see it reached kind of a peak, and then you had this big down day. It was a big shock day where it wiped out a couple weeks of upward movement in one day. Then it tried to gather itself and then had another move down, create that ABC pattern there. That's kind of that's kind of what I'd like to see early on, is a little bit of that sharper drop. That's usually a big warning sign that something bigger is taking place. And really, in comparison here, you've had 2 down days that have basically wiped out the last 3 up days from last week. That's not a big, it's nothing that I would be overly concerned about. But again, considering the context, you got to be a little bit concerned that it could morph into something a little bit bigger. The Dow, kind of the same thing, not much different there. Let me erase. Dow chart's not really any different. The Nasdaq 100. Now, we did end up breaking out and closing a new all-time high. That was something that I did not expect to happen back when we broke the trend down here, broke that trend line down here. But we broke out, and as of today, if we close like this, we're right back down below that breakout area. So could that be a false breakout or failed breakout? I don't know yet, but that's something to, again, as you're going through this, you try to keep an open mind. We're trying not to, I always compare chart analysis to being like a crime scene investigator. Now, I've never been a crime scene investigator. I've watched a couple of those shows on TV, but that doesn't make me an expert. But the general idea that I do gather from those TV shows and other serious shows that I've seen in the past is that the objective of a crime scene investigator, when they come onto the scene of the crime, is to try not to come to conclusions until they've looked at the evidence. In other words, it's real easy to start saying, "Oh boy, that is pointing to this." You see a gun lying on the ground. Oh, that means this. A broken window. That immediately means this, and you're piecing together the crime too early. And so at that point, every bit of evidence you're finding, you're trying to fit it into the crime as you already assume has taken place, how you've already assumed has taken place, and it can force you to introduce your own biases into the analysis. Now, we all are going to introduce bias into our analysis, and we're all human. We're all going to do that. I can tell you right now, every time I analyze markets and charts, I bring some sort of bias into that analysis. We got to try to do all we can to try to fight that, though, as best we can. We can't eliminate it, but we try to fight it. And so the way you do that is to try not to just assume that, just assume that we're breaking back below this breakout area, that just immediately assume that's a bearish reversal, that we're going to drop now. So you're trying to, in fact, a lot of times what I'll try to do is force myself to try to be bullish on the market, even if I'm bearish, and say, okay, well, what if I'm really bullish on the market? How would I view that? Now, if I was really bullish on the market, that would concern me, that it dropped right back below that breakout area. And if I was really bullish on the QQQ, I would immediately want to see a bullish reversal day to reassure me that maybe that was just a little bit of an anomaly where it dipped back below it, maybe faked some people out, and now it's back, faked the bears out, now it's right back to moving up again, So that's what I would be looking for over the next couple of days. Is this going to get a bullish reversal? If not, then you have to kind of force yourself to say, well, this could be, we could be in a bearish trend reversal at that point, and we could be starting to roll over. By the way, the training we're going to do today is on trend lines, how to draw trend lines. And that's an important part of all this process as well. We can identify some of these key areas, that we just did. The key areas that it's significant that we broke above it, this area. Let me draw that trend line in again. And then it's significant that we could be breaking back below it. Now, remember, the market is open for another hour and a half, so that a lot can change on this. It could come all the way back up and get back above that breakout area by the market close. But if it does close below there, that would definitely concern me. Another thing, though, and we don't have there's not a ETF for the Nasdaq Composite. The Nasdaq, this is the Nasdaq 100. So this is taking the top 100 Nasdaq stocks, and this is what we usually follow when we're following the Nasdaq in general. It's kind of like the S&P 500. You're looking at the largest companies within the universe there, and focus on those. But the Nasdaq Composite is kind of a broader index. It'd be like the S&P 500 compared to the Russell 2000. Okay, so the Russell 2000 is covering 2,000 stocks. S&P 500 is covering 500 stocks. Are they moving together? That would be an indication that there's a lot of certainty in what's going on. We saw this a lot in November when the market was really rallying strong, where all the index was kind of moving in the same direction, and everyone was kind of participating. There was money going into almost every stock at that point. It was trading was easy back then. You picked any stock and it went up. Almost anything went up. But the Nasdaq Composite is it's the whole Nasdaq index. Okay, so it's a much broader index, and it hasn't broken above that previous trend line. It's somewhere right below it, and it's been moving kind of sideways the last couple of days. This has kind of been moving sideways a little bit after it broke out. We call that a negative or a lack of confirmation or negative confirmation that it hasn't. They should be breaking out together. Now, again, I don't want to focus too much on that because it could be they're lagging a little bit, and maybe in the next week or so, the Nasdaq Composite breaks out, and if Nasdaq 100 starts moving up again, Nasdaq Composite breaks out, and they were just lagging a little bit. But that is something to keep an eye on, because if that continues, if we start to see that selling continue, and you start to see the composite index have a bigger down days than the Nasdaq 100, it could be a signal that that maybe you're getting a little bit of a deeper correction in those two indexes there. Russell 2000, we talked about the non-confirmation of the Russell 2000, how it is nowhere near its previous all-time high. We talked about the possibility it's forming that bearish head and shoulders pattern with your neckline down here. You have a over 2% drop today on the Russell, where if you go back to the S&P, well, it's barely almost a 1% on the Nasdaq 100, less than 1%, about 0.75% on the Dow, and about the same on the S&P 500. So definitely the Russell 2000 is having a bigger down day percentage-wise than the other indexes. That could be telling, because it's been lagging. It's been resisting rallying with the rest of the market, and then now when you have a down day, it's having the bigger down day. There's much heavier selling going on, and it looks like you'll probably have a bigger volume day than we've seen when this all settles in. You probably see a bigger volume day than we've seen for the last several weeks. All right. Bonds. Let's take off the volume bars here. Now, we talked about the move on bonds. They've been rising right through here, but we looked in the context of this move down, that this could be, that's supposed to be an arrow there, that this could be wave A, wave B, wave C, kind of a bearish ABC pattern setting up for another move lower. It started to kind of do that the last couple of days, but here you have a little bit of a move up. Now, why do I think that can be a little bit significant there? Well, if that holds, you're going to have higher high. Here's a higher low right here, higher high, and this could end up being a higher low on that little pullback there. It could be in the early stages of acting a little bit like an uptrend. What could also be significant? Well, there's a tendency to see the market sometimes move in the opposite direction of bonds, meaning when the market goes down, money is coming out of stocks, and a lot of times professional traders do this. You're not seeing your retail traders doing this, but the big professional traders don't want just sitting that money is sitting in an account making nothing. They want to get something for it. And so a lot of times they'll put that money into the bond market. They'll get a much smaller return, but they'll get a return. And so you tend to see bonds rise. Now, you can make the counter argument that bond yields have been going higher, which makes it less appealing for big institutional traders to put money into bonds. They're not going to make as much. And so there's a tendency to, so there is a little bit of that, hesitancy to see money go into bonds. Bonds have been clearly in a downtrend. Many experts expect bond yields to continue to rise, but in the near term, we could see that where money does come out of the market. We see the market sell off, and the way the TLT is acting right now with today's move right there with the market down and getting a little bit of a spike up. And it's a decent spike up as you look. It's a pretty big up day right there in bonds. There was a big day right there where it gapped up, pulled back a little bit. That created that higher high. We'll keep an eye on this to see if we start seeing bonds start kind of stair-stepping up a little bit. And especially if it continues to do that in relation to the market dropping. If you see the market down and bonds to TLT up, and you continue to see that, that would tell me that that's what's going on, is that money is coming out of the market, going into bonds. Now, what else makes that significant? Well, remember where we talked about earlier that there's been kind of a rotation going on where money is coming out of one sector, going into another, coming out of energy, going into technology, or you're seeing that moving around, and that's what was kind of creating some of those mixed market days where the Nasdaq would be up and the Dow would be down, or vice versa. That tells me when these institutional traders are getting out of something, they're immediately getting out of something else or getting into something else within the market. They're not fearful that there's going to be any sort of pullback. So why go into bonds where I'm not making anything? Let's go put it just in another area of the market. And that's what creates situations where you have the market, where the market could be going down and bonds could be going down. Usually it's very temporary, but they don't see the need to go into the bond market. If you do start to see money coming out of the market going into bonds, it tells me that professional traders are a little bit more concerned that those other areas they might go into are going to drop as well. So why not take that chance? I'm going to go into bonds and take that safer return, even though it's going to be smaller. And so it's a real subtle clue there, but that's something to keep an eye on to see if you start to see the TLT kind of stair step up a little bit as the market is dropping. And then if the market starts to rally, to see if it starts, if bonds start dropping again, as money comes out of bonds and goes back into the market. We'll keep a close eye on that. We'll maybe have a little bit of a clearer picture on that on Thursday when we do that update. All right, gold. Gold has been moving higher. We talked about this as possibly being a bearish ABC pattern that's setting up on gold. This is a previous lower high right here that I think we talked about to keep an eye on. We had lower highs, lower lows. Even within this move up, if this is wave A, wave B, wave C, and we're going to see gold drop again, this is going to be probably a significant area right here, because on this move up off of this low, you did reach a higher high right here. That was a higher low right there, higher high right here. It's kind of, and you can get that within bearish corrections. A bearish correction is an upward move a lot of times, but it's setting up for another move down. This will be significant though, because that was on this last move up right here, that was the higher low right there. If we start dropping and we go to a lower low, that would probably confirm to me that that's a bearish ABC pattern and we have a much bigger drop. If it continues to move higher, this is the high area that I'd keep an eye on, because that was a previous higher or lower high. And now you'd be going to a higher high. You see, that was a lower high right there, and then you had this big drop down right here. You haven't had if it would have come down here and had a move up and then back down, then you would have been focusing on that high, but it came straight down from there. So this is the significant high right here at about 170, 169, 170. If it breaks above that, you'd be much more likely that you're in a trend reversal and things are going higher. So you are a little bit in limbo still right now. Those are the key areas that you would look at for gold to give confirmation as to whether the trend in gold is likely to continue up or roll over and be more likely to continue to go down. Oil, now oil, again, if you've been following the updates last few weeks, this looked to me like a first move down. This looked like a little bit of a correction. So that looked like wave A, wave B, and I was expecting to oil to have another move down for wave C before starting to trend up again. That still could be intact. That still could be wave A. This could be kind of which you often see in a wave B is an opposite ABC pattern, A, B, C. So it just rallied up a little bit higher. I'll do a lowercase a, B, C. With today's start of a drop, maybe that would be wave B. With today's reversal, it could be that we start wave C that brings us back down into this area here. and then move back up again. Now, if not, if we break out, obviously that throws all that out the window. Where this isn't a correction, likely a correction within the downtrend. You're back into that uptrend again, and you'd want to be bullish above that previous high. And we'll have to see if there's any follow through to today's selling. Let's throw the volume bar back up there again. Yeah, a little bit higher volume. We're going to see a little bit higher volume than we've seen the last few days. But we'll keep an eye on that, see if that is starting a little bit of a bigger move down in oil, which would probably make sense if the market does correct. You'd probably see oil. It's had a huge run up. You'd probably see oil drop a little bit off of that, which is good. Any sort of pullback or consolidation is good for the overall trend to see that. The dollar, again, it was kind of stair-stepping up through here. We talked about the possibility that this could be kind of a correction for another move down. We started to drop significantly in the last couple weeks. The key low on the dollar was to take out that low. That was the previous higher low. We've gone to a lower low now. So I would assume at this point that the trend is reversing into a downtrend. What would confirm that? We're up a little bit on the dollar today. If we try to rally a little bit, that rolls over and gives you a lower high. Now you've got a lower low confirmed by a lower high. It's acting like a downtrend, and it'd be much more likely that you'd be moving down towards these previous lows down here. You say, well, just breaking that lower low, is that enough to assume that the trend is dropping? Definitely, that's the early stage. That's the first thing you would look for is that break to that lower low. That's why I definitely would feel like this is in the downtrend now. But what would confirm that and make it stronger would be if I get that lower high as well. And then obviously if it goes to another lower low, that confirms that as a downtrend even stronger. But we're in stages. Our confidence in trends happens in stages. It gets stronger and stronger as each behavior is confirmed. Gets weaker and weaker when it's not confirmed. And we're never going to know exactly. Always have to have that in the back of mind. VIX, I think this is significant. The last 2 days, we've seen a pretty big bump up in the VIX. What is that telling me? It's telling me that with the selling over the last couple of days, you're seeing these big institutional traders start to hedge. They're not panicking, but they're recognizing that markets have had a good run. Markets typically will have corrections within those runs. Why not protect what I have a little bit, nibble a little bit with some protective puts? They're not being aggressive buying them, but they're being a little bit more aggressive than they have been. That's why we've seen the VIX spike up a little bit more, and we really haven't had a huge down day. So it's not like, it's not like there's like the big panic. But you can see the VIX is up 3%, with the S&P 500 only down, remember, 0.75%, not even 1%. So a little bit of a higher move right there. Again, it's early, but we want to see if that continues to trend that way. If we start to see that fear pick up, if we have another down day, do we see that big spike up? And especially if we see something, when I talk about that trigger, if we see something, some sort of news item that triggers the selling that everyone's kind of focused on as the reason for the selling, and you get a big spike up in the VIX, that would tell me that those professionals are being a little bit more aggressive. A couple more we can add that I've talked about. SMH, the chip sector, tends to be a little bit of a leading indicator. It failed to go to a new high. It's been dropping pretty sharply the last few days. it's still kind of within this trend line though, right here. So it could hold support right there and bounce off of that. We'll see, but that's if it starts to break that trend line, it probably means that we're in a little bit bigger correction. You've also heard me talk about the Dow Transportation Index, the IYT. You could use Dow Transports. They haven't really shown any strong weakness, but they have started to move a little bit sideways. They had a really strong move up through here. You could make the argument that they're in the process, could be in the process of breaking that upward trend line right there. Kind of move below it, but they haven't really dropped and moved. They're still moving more sideways. But if you see a sharp drop in the transports, I would probably use this previous high right here as a key spot. That was kind of the breakout, pullback, broke out to new all-time high, and then it started to move sideways. So it breaks back below that breakout area there. Now you've broken the uptrend line right here, and then you've broken back below the breakout area right here. That would definitely show me concern. But again, why haven't I come out and really said, "Oh, here it is. I'm making this bold prediction. We're gonna sell off big right here." Well, again, all these pieces we're putting together, and I know I'm taking a long time on this update, but there's a lot of these pieces that we got to analyze, and none of them are really screaming that something major is going to happen. And the fact that transports are just they're moving sideways, but they're not showing any sort of breakdown yet. It's not telling me that it's screaming that a bigger sell-off is going to happen. And so I want to make sure I factor that in. And this goes back again to what I was talking about earlier about biases. If you're not careful, you can kind of force yourself into trying to fit every chart into your own bias. I could if I was really bearish and thought, man, we're within a couple of hours of seeing a big sell-off here, I could just say, oh, that was enough to have it break that upward trend line. That's it right there. We're done. No, it probably needs to do a little bit more than that. At least it needs to break. Let's erase some of this stuff. At least it needs to break below the sideways support right there. It hasn't done that yet. So you got to be careful jumping the gun or getting too confident over a couple indicators. All right, let's do a couple quick stocks and then get into training. Under retail, sometimes when you get these market pullbacks, when they pull back a little bit, sometimes what I'll do is instead of going to the holds, I'll go into the buys. Remember, these update overnight, so sometimes you can catch a stock that's in a stronger uptrend that's been at a buy signal that's pulled back and maybe it's just gone to hold. And now it takes a little bit more time to do that, but I just want to point that out. That's something I will do sometimes is see if I can't catch some of these stronger performing stocks, because if I see a stock that's in a nice strong uptrend and the market's dropped for the last couple of days and it still has a buy signal, it hasn't gone back to hold, but it's pulled back and maybe it's pulled back to a previous breakout area right here, that thing could hold and continue to move higher. And these stocks, a lot of these have really taken off and done well. That I might have missed that if I'm waiting for it to go back to a hold signal. Now, the key on this is usually it's usually when the market's been down for a couple of days or so that I'll do this, because if it's been screaming higher, I'm assuming that most of these buys are up here, and I don't want to be buying into it when they're up here. I want to buy into it when they've kind of pulled back a little bit. They've kind of formed that step. And that's the main reason why we go into the holds, is that that's usually what causes those stocks to go, those high strength ranked stocks to go back to hold, is that they're pulling back within those larger trends, which is an ideal entry point to get back into those uptrends if those uptrends are going to continue. But one that I liked is right here at the top of the list. There's this big five, BGFB. Now it's down a little bit today, and that's something. And it actually is going back to a hold today. It'll go back to a hold today. But what I've liked about this, and we've pointed this one out a couple times, I think a couple times before, but you have the higher high here, higher low. It's pulled back right here, come back up, and then it's kind of drifting sideways right here. That could be a little bit of a cup with handle formation. Did dip down a little bit further here, and that's probably as far as I'd want to see it dip out of this pattern here. So I'd want to start to see it move higher again. And now that it's probably going to end up being a hold again after tonight's update, you could just wait for this thing to go back to a buy. Or, as we've talked about many times, wait for the breakout on some of these. It's not too far away from the breakout. I don't know, about $17.50 or somewhere around there, probably breaking out. And if it does, the chances of moving higher are pretty good. And we have a pretty good idea with the cup, if that is a cup of handle formation, about how far it could go off of that. Now, this is also in a key area here with the trend line. It's not surprising why it reversed off of that intraday low and started to move up off of that. That was where the trend line was. You'd want that to hold. So if it breaks that trend line, this thing could be rolling over a little bit. But that's one that I like. Under transportation, this DAC, it's also down a little bit today, but again, you could look at this little sideways range right here. You'd want to kind of hold right there. It did kind of break its trend line with today's move, so it really would need to hold right here and start moving up, because if it breaks down below that, especially if it breaks down this low, you get a lower low and could be in a little bit of a trend reversal there. Or you could just wait for it to break out above here. If it can resolve what it's doing in here and then not go down much further and then come back and break out, that'd be a good entry point into that particular stock. On all these, I would definitely wait for confirmation. We do want to see if this is going to turn into something a little bit bigger. This pullback is going to turn into something a little bit bigger this week. Under industrial products, I liked I think it was industrial products. Yeah, right at the top here, TWI. Kind of similar, a little bit similar to that big five. We had this little dip down and kind of a little bit of a cup with handle, but it's down today and it's right at a key support level. Kind of like that DAC, you have this little trend line up through here that's kind of broken below. That's going to be a critical low right there. See if it holds that. There again, if it holds that, can move higher. You could also buy a breakout if it breaks out. Or if it goes back, it probably will go back to a buy signal right at the breakout area if it does start to move back up from here. And you probably want that extra confirmation and just wait for the breakout. Under computer and technology, I kind of like this ZDGE 98 strength rank. I'm a little bit concerned, though, that it could be forming a bearish head and shoulders pattern right here. It is hugging the trend line, though, right here. And we're going to talk about drawing trend lines in just a second. So this is a critical spot. It would need to move up off of that. If it breaks that trend line, especially if it drops below this low right here, you'd have a lower low, you'd have a lower high. It's acting like a downtrend. On the other hand, if it can break out above that previous, that lower high right there, if it can break back above that, it'd make it much more likely that this thing is heading higher again. All right, let's get into the training today. I'm going to switch this on to candlesticks here when I do the training. We're going to talk about trend lines. Now, this is pretty basic, I know, but there are a lot of people that have been trading for a little while that I hear this feedback a lot of times that they don't feel real confident in their ability to draw trend lines. And one of the common themes that I hear is that I can draw a trend line. I can draw trend lines all over the place. So I've got lines everywhere, and I can't make any sense of it. It doesn't help me at all. And that is a problem. You don't want to draw too many trend lines, okay? You really can draw them all over the place, and they don't mean anything if you're drawing them all over the place. You want to focus on significant trend areas or lines. I like the term areas. I like support resistance areas because markets just don't move a lot of times in an exact fashion. And if you get too focused on exactness, I think it affects your ability to read those trends effectively. So I've got a few guidelines here, and then we'll start applying this. By the way, I know that that Market Trend Signal doesn't have a trend line tool, at least as far as I know. There are apps out there that are screen drawing apps. You see, I've got one in GoToWebinar that I use all the time. You see me with that, I can free draw like that. People ask me all the time, it's like, where is that feature? That's actually on the webinar. But there's other screen drawing apps out there that you can put on your computer that allow you to do the same thing. When you have your screen on, you can draw stuff on it and erase it. So that might be something that that you consider. In fact, I tend to prefer that a lot of times because it's real quick. I can just quickly draw and then erase it, so I don't have lines drawn all over the place. The bad side of this is that I'm free drawing. As you see me curse under my breath a few times when I can't draw a straight line. That can be a negative, but anyway, that can be something you could consider if that's look for some of those screen drawing apps you can put on your computer. One of the rules is you need to have at least 2 touches on the line in order to have a valid trend line. If I have a stock that has moved up and it's pulled back and it's moved up again, I can't just say, okay, here's 1 point, there's your trend line right there or something like that. You need to have a couple touches on the line. Now, it could be starting from down here where it bottomed out and then pulled back. There's one line. That could be the first touch. This could be the second touch, and then I can extend that out, and I could watch to see if that thing bumps into that. Okay. Don't always expect exactness. I just kind of mentioned that. One of the key things is I like to look for congestion areas. You want to get away from having trend lines drawn all over the place. Well, look at where the most significant areas are. So this goes back to don't look for exactness. I don't expect to. Let me just give you an example. This will make sense if I give you an example. Let's say you have a stock that starts to move sideways like this, and then it drops and it starts to move like this. Okay, well, where are my congestion? Where's my trend lines? Well, I could draw a trend line right here. I could draw a trend line right here. I could draw a trend line right here. These are all different spots. Or I could say, okay, here is a congestion area right here. Here's a resistance area. Here's a support or resistance area right here. And focus on the area or the zone and not necessarily the exact spot. So if this stock were to rally back up, as it gets close to this area, I'd be wanting to look to see if I see any sort of bearish reversal taking place. If it breaks out of that area, that'd be significant because it broke out of all that congestion. Now it's above it. It's cleared it. So look more for those congestion areas. You want to look for horizontal support and resistance, drawing horizontal trend lines. I'll give you a quick example of that, and we'll look at some live examples. And you want to also be able to identify, is there clear support or resistance along the trend? This would be the angling support or resistance. You see me draw that a few times on some of these examples. Now, the perfect trend would be something like this, where a stock moves up, pulls back, moves up, pulls back, moves up, pulls back. Because I could have a perfect horizontal trend line drawn here. Here is resistance. It broke out, pulled back, and now resistance became support. Here's resistance, broke out, pulled back, there's support. And then within the trend, you could say if I connected all the lows of the trend, they all line up. If I connected all the highs of the trend, they all line up. I would know exactly when to get in, exactly when to get out. Get in right here at the confluence of those two areas. When it broke out to a higher high right here, buy more. When it gets to the upper trend line, start selling, sell it all, get out. When it pulls back to that confluence area again of horizontal and trending support, buy back in. I mean, we'd be perfect traders. That would be the ideal trend line analysis right there, okay? But obviously it doesn't work out that way. But that gives you an idea of why we look at both the horizontal support and the trend line support. And again, we're trying to kind of see, is it kind of following that behavior, or is it breaking that behavior? All right, let's take a look at a couple of examples. In fact, let's go back to, we can start right here on ZDGE. One of the things I pointed out right away on this one was the connected the higher lows right through here. Touched right here, right here, right here. That's significant. Every time it's come back that area, it's held. Okay. Now, what if it keeps dropping? What if it drops below that trend line? Now, again, this is where you got to be careful about exactness. I also get the question a lot. Well, do you draw your trend lines at the extremes or at the closes? Could I draw it here at the closing prices? You could analyze both. I do take into account extremes because they are valid, in most cases, valid trading areas on the chart. But I'll consider both as well. Now, what would also jump out at me is here was a low right back here, and this intraday low was pretty close to that. And remember, you need to have at least two touches on that line to be a valid trend line. Now, it doesn't mean you can't draw. It doesn't mean that if I didn't have this low right here, I couldn't extend that out. Any higher low, you can extend out to see if it gets broken. Because if that were to come down to that area and it held right there, it would become a valid trend line, and it would be a valid support. If it blew right through it, then it would not have been, wouldn't have had any reaction at all. But you had a little bit of a support back here. You draw a line across. This didn't quite get exactly to that low of this, but it's close enough. So on this stock, if it were to broke that trend line right there, that's a warning sign. Maybe I don't want to own this thing or don't want to buy in on this thing. If it drops down further and drops to below that horizontal support, it just confirms that this is acting like a downtrend. It's not acting like an uptrend. Okay. And then you throw on top of that the lower high right here that happened. And that's kind of confirming that negativity, or that negative, or the bearish. I shouldn't say negative, because going down isn't necessarily bad, especially if you're shorting stock or buying a put or something like that. Now, if the stock holds right here and it starts to move higher, you got resistance in this area right here. I guess it dipped a little bit above that, so this is kind of a congestion area. You can even throw in this previous high right here and say all this is a congestion area up here. You could clear that. If we came off that horizontal, or that trending support right here, and broke out of that, it'd be a very bullish sign that this thing could go much higher. It also gives you a triangle formation. Here's the base of the triangle. And usually when the stock breaks out of the triangle formation, it'll go up about the distance of the base of the triangle right here, projected from the breakout area. Put you up around here. Let's look at a stock I came across on going through the analysis on Foot Locker. Foot Locker had a nice trend. Look at that. Although, again, there are going to be some key things to remember or to look for, but look at, I mean, this is almost textbook right here on the horizontal support resistance. Here was resistance, pulled back, broke out, came back. What used to be the ceiling is now the floor. Broke out again. So you draw a trend line across the ceiling there, the previous breakout area right there, pulled back. Again, this is why you got to be careful about exactness. It dipped a little bit below it on that day, but came right back above it. So generally in this general area, it held that support, broke out right here, came back below it, did dip below it right here, but it came right back above it again. And so this is significant right here. We're back down to that area right here. This is going to be critical. It's got to hold that area. It can dip a little bit below it like it did right here. Yeah, but you've got to hold this general area. Now, what concerns me a little bit about this trend, though? Well, when I connect the lows, look at this. You can connect the tops right here. Look at, it's almost perfect right there. Every time it got back up to the top of that trend line there, it would pull back. You need at least two. So had I had these two and I extend that line out, as the stock moved higher up towards that upper trend line there, now the stock is a little overbought, could be due for a little bit of a pullback. It started to pull back initially right here, tried to move up again, and then it pulled back sharply right here. But you knew that you were up in that, you're up in the upper part of that trend line there. This is where you'd be expecting it to start to pull back, is when it gets up in that area there. It got close to it right here, and then what did it do? It pulled back a little bit. You connect the lows on this. This is what concerns me a little bit, is today we broke that horizontal, or not horizontal, the trend, the support of the trend. You still have the horizontal holding right here, but if it breaks that, see back here when we dipped below the horizontal trend and recovered, we didn't break that support of the trend line right there. The support trend line of the trend. Same with this back here. When it dipped below it, came right back above it. But here we dipped below it significantly. So I would say this has got to hold pretty sharply. If it dips below that, I really don't think that. I think we're in a trend reversal. Now, another thing I like to do, and I do this, it's easier to do this with the free drawing tool, because most of for charting services out there, if you use a trend line, it'll be a straight line. You're connecting straight lines, which is good because it's a perfectly straight line, so you can line this up a lot easier. what I like about my little free drawing tool, and you can just visually see this, you don't even need to draw it, but when you have a trend in place, again, up here it's so easy to look for reasons why this is going to keep going higher, right? Because it has kept going higher. But watch what happens when I draw a line connecting the tops of the trend. Everything looks fine. Everything looks fine. Oh, wait a second here. Whoop. There's the next high right there. Can you see that flattening out? Now, could it flatten out and still go higher again? Absolutely. But it didn't keep going higher to line up at that point, to line up with the upper part of that trend. That's a warning sign right there. Now, again, like I said, it could be just flattening out and taking, and you've got, if you connect the horizontal tops right here, you got a little bit of a double top right there. Hit this area, pull back, hit this area again. You've got a little bit of support from this little congestion area right here, which is where we're sitting at right now. What if it held that and it broke out again? Okay, I'd buy that breakout any day, because that would tell me that this might have just been a consolidation or a pause and the trend is continuing again. So, in other words, what we're doing in drawing these trend lines, we're trying to remember, trading is all about, especially technical trading, is all about probabilities. Are we analyzing when a trend has a high probability to go higher or a lower probability to go higher? And when do we know if that's shifting? Is it getting better or is it getting worse? Trend lines help you recognize that. Just like I've shown you on this chart, the fact that this high did not happen at the top of that upper trend line right there tells me that trend could be flattening out. That's a warning sign. I wouldn't go short right. I'd never go short right there, just assuming it's going to drop. But I definitely wouldn't be buying more or increasing a position right there. I might even consider tightening stops a little bit off of that behavior. Then it breaks the support line. I might short off of that because I've got I'm starting to get probabilities moving in that direction. Or maybe I wait for this last little support to see if that holds. And there again, my decision could be, well, if there's enough there with that high flattening out and breaking the support of the uptrend to short a little bit, to start a short position or buy a put option or something like that. And then if it breaks this congestion area right here, we'll buy more puts, increase the position, because now the probabilities are stronger that this thing is going to drop. Now, what about trends that are dropping, and can we recognize when they could be moving back up? Well, let's take a look at Apple. I know I've got a little overtime here. I got a lot to say today in the update, so I want to get these examples in. So there's kind of your stair step down in Apple. We're going to connect those high and lows of those trends here. So let me try to draw that again. There we go. That's a little bit better. Connect the lows. Actually, I can draw those a little bit better here. This one was drawn pretty good here. I'm going to draw this one right through here. And a little bit of a intraday low that broke below that, but here was a closing area right here, and that line lines up with this low right here as well. So you had lower highs, lower lows. What about our horizontal? That's significant there. That was a low right here, broke below it, rallied back up to that area. That became resistance. I'd probably say this area right to here, because I'm looking at more congestion. There's a lot of congestion right into there. There's these lows right here, these lows right here. All right, so what happened with Apple? Came off of a low right here, the lower part of the trend line. Moved, it had gone to a lower low from here, gone to a lower low off the horizontal trend line, broke back above it. Just because it broke back above it doesn't mean you're in a trend reversal, but then it broke above the upper declining trend line right there. That was the first kind of break of that trend, that downtrend. Now, a lot of times you'll initially break it and people won't believe it's broken yet. And here it sold off a little bit, but look how it sold off. It sold off, came back to the up above that trend line right there. Now it was below it. It broke out above it. Now it can pull back to it, and it pulled back to this horizontal support area right there. So a few days it just kind of bounced around right into here. And then it took off and it broke into a higher high. That became a higher low. As soon as it broke out to a higher high right here, there became a very high probability that Apple was going to go higher. Look at the trend lines back here. Here's the horizontal. Here's the horizontal. There's a horizontal right here. So it came up, pulled back till here's where we knew we had the trend line, because here was the starting point. Now you have two touches. Broke out. What used to be the ceiling is now the floor. It pulled back, held that floor. Broke out up to here. This is the first time it kind of formed the upper trend line right here. Starting, you can't see it where it started back here. Or maybe that isn't the starting point. Maybe I grabbed the wrong line there. This box is kind of hiding it right there. But it pulled back to that horizontal support area. Bounced a little bit, broke out to a higher high right here, came back to that trend line. Tried to rally, couldn't, and then broke it. Here's where it broke it, right into here. Came down to the horizontal support area, tried to bounce off of it, failed, broke through it. There was your first warning sign that you could be reversing trend. That confirmed it. So again, if you wait for too many clues, you're going to be too far into the trend that, so you got to make some of these decisions early. A lot of times I'll take an initial trade at the first kind of break of the trend, and then I'll add to it when you get a second confirmation. Same with over here, as it continues to confirm, you increase the risk a little bit. Anyway, I hope that helped a little bit. You see me drawing these trend lines all the time. I thought I'd have just a little bit of a class on it. Again, the key points, you don't want to be drawing lines all over the place. Look for the key areas. That takes a little bit of time. I will tell you, though, that it's worth putting in that time, because you'll get to a point, I promise you, you do this enough, you're going to have to look at a lot of charts to get the skill down, right? I can't throw a football pass to a receiver and then suddenly wonder why. I finally learned how to just throw the pass, and then I wonder why not all the colleges are asking me to come play for them. All the NFL isn't asking me to come play for them. No, you've got to refine that skill to where you get really, really good at it. Okay, but once you get to the point, you can see these trend lines without even drawing it. I can pull up a chart and I can see the trend on it and the support resistance and the support resistance of the trend. I can just see it without even drawing it. And that, how fast is that? Now I don't have to take the time to draw them. I already see it. I don't even need to draw it. And that's when your analysis time gets really cut down, and you can go through, people wonder how I can go through all the S&P 500 stocks in 15 to 20 minutes. It's because I don't need to look at the chart for more than a couple seconds to see everything on it that I need to see. And to recognize, hey, this is a good trend, or this isn't a good trend, or this trend is breaking down, you immediately are able to recognize that. I mean, but that takes time. At least you have the foundation here to get started and then learn these skills, and you'll start to see these as every week when we pull up charts, I'll draw those trend lines in, and if you really kind of focus on it and even try to do it yourself. If I go through an analysis in class, and what you ought to do is go pull up that stock without reviewing the analysis I did, and see if you can draw the trend lines, and then go back and review the recording and see if you drew them in the same spots that I did. That's a good way to kind of help improve your skill in recognizing where those lines are, because you're actually doing it, and then you're getting kind of you're getting to go back and review the recording where you can actually see where those trend lines are and see if you did it right. Okay. All right. Thanks, everyone. Have a great week. And sorry, this was really long today, but have a great week. We'll see you on Thursday for the stock specific class. Bye now.